Crypto Trader is proudly brought to you by eToro. Discover a simpler way to trade and invest in cryptocurrencies and more.
Coverage of Hong Kong Blockchain Week is brought to you by Nexus. This week's edition of Crypto Trader starts right now. And here in the heart of Asia at a conference with over 3,000 people, 150 speakers from over 100 countries. It's Hong Kong Blockchain Week. Let's go. Hong Kong, welcome to the most expensive real estate by square footage in the world. This once British protectorate and Chinese stronghold has carved out its place in international finance like no other island in the world. Its skyline and skyscrapers, surrounded by peaks and valleys, sit atop the Asian financial fault line and influence the swings of the global financial system. This episode into Hong Kong Blockchain Week, where you'll see the sovereign city taking center stage in the world of crypto, with an interesting blend of traditional finance services, institutions, projects, STOs, and of course familiar faces in the world of crypto. So I just got off a plane right here at the Hong Kong International Airport, and I went straight to the convention center for the beginning of Hong Kong Blockchain Week. With me, I've got one of the hosts of this event. John, welcome onto Crypto Trader.
Thank you for being here.
So, I expected to come to a place in the bear market and see few people with gloomy faces walking around and looking for some hope. And I'm here, and this place is bustling with activity. What was the thought behind having it here in Hong Kong?
Well, I think the most important thing is that when you look at the next generation of growth for blockchain, as we go from crypto to blockchain, you have a lot of things that you need in an ecosystem. One of them is actually a financial hub. Hong Kong is already a financial hub. There's 150 plus banks here. There's about 2.5 trillion of assets already here. And what we're starting to see is that an ecosystem is building and is becoming much more outgoing and public about that to the wider community globally.
Now I'll tell you something exciting. Some of the best crypto numbers happening right here in real time. And for some of the best insight, let's look at a site that we all check every single day. Okay, let's play a little game. I'm going to give you crypto adoption numbers, and you're going to tell me what those numbers belong to. The numbers are very simple. 3.6 billion page views, 125 million unique users, 12.5 million active monthly users. What crypto-related entity has those numbers? The answer is very simple. It's CoinMarketCap. And with me, I've got Luke, who's their #2 employee.
Yeah, I'm the second hire of CoinMarketCap. The chief evangelist is my technical title.
Luke, those are staggering numbers.
Yes.
How big is CoinMarketCap in terms of how many people work there?
We're almost 40 people, actually, yeah.
What do 40 people do at CoinMarketCap?
So we have engineers, we have business development team, we have marketing, just like any team. We have also content support as well. We have a lot of ways through which we interact with our community, and so that's very important to us.
Okay, and I mean, the improvements in the site, I know that that's something that all our viewers are looking at. What can we expect coming from CoinMarketCap in the next, say, 12 months?
So we have a lot of really exciting things coming. Some of them I could share with you. So in the more immediate future, we're going to be releasing two really awesome mobile applications on iOS and Android with a plethora of new features that I think our users are ready for. Beyond the mobile applications, we're releasing a new UX UI overhaul to the site. That's
so you're saying this app that you guys have currently got, which is absolutely unusable with all due respect, you're saying you're finally changing it?
Yes, we are releasing. It's going to be totally redone. The UI is going to be totally redone. The features are going to be more in line with what people are expecting, and it's going to be available on iOS and Android.
And the actual site, what can we expect from the actual site?
We're going to be releasing a slew of new features in the coming months that's going to make the site more customizable to the user. So different ways to filter through and tailor the data to the way that the user is most relevant to them.
Give me some examples of how users may want to tailor their data.
So, say if you're a trader and you want to see exchanges, data from like only a certain set of exchanges, you should be able to do that, right? Or if you want to make custom lists of coins to view the relevant metrics of, you should be able to have that capability. So we want to bring that, give users more control over their experience on the site.
Now look, last time I looked, there were about 2,000 odd coins on CoinMarketCap. How do you decide which coins make it onto the list and which coins don't?
So at this time, the only criteria for a new coin listing is that, we require that a coin be listed on two exchanges that are currently supported on CMC. The reason for this is because the price we display is a weighted average by volume. And so we want the price to be just that, an average, and not necessarily one source of price.
And in the world of security tokens, which promises to be a big theme in 2019 and beyond,
yes.
Are you guys considering adding on security tokens? For example, are you adding on T0, which is now a listed security token?
So we are thinking really very proactively about how to best track that information. We know it's very important to our users. We see personally there's an increasing amount of institutionalization of the crypto space. So you can definitely expect to see all that information on CMC in the coming months.
And now as I take the stage for a crypto investment panel, let's cross over to our Hong Kong contributor, Lindsay Ju.
How has Blockchain Week been for you so far?
Yeah, I think it's been really excellent. I think one thing they did really well is they did not charge a lot of money for the tickets, and it allowed a lot of the normal retail people who have suffered quite a bit this past year to actually come here, and I've got to talk to them, and those people are our users, right?
It's really good to see a lot of people talking about traditional uses of blockchain. So it's about merging that kind of institutional world with this digital blockchain world.
I definitely see a different feel. And I think that with the institutional catalysts coming in with Bakkt, Fidelity, NASDAQ, and all these, Facebook coin, I think that's sort of energizing the air.
Jake, how is Hong Kong Blockchain Week?
I'm actually loving it. It's a big difference from the last couple of years as crypto's obviously shifted.
Tell me a little more about that.
Well, as you can see, a lot of things are going on in the crypto space. And personally, I'm running a project right now, and we're moving it into a masternode wallet. I've developed a masternode wallet that can host a whole plethora of coins, and we're listing them for free.
What about the market? How's the market?
I've, been doing some longs and shorts, and it's been working out pretty well. I think it's still seemingly cheap time to buy Bitcoin, so pretty optimistic about everything.
As I said, I took center stage for an investment panel with the traditional finance world and representatives from Swift, Microsoft, and Calastin.
Our moderator for today's panel, you probably best know him from the global scene because he has a television show on CNBC, Crypto Trader. That is well known. Ladies and gentlemen, please welcome Ran Neu-Ner.
So, Lisa, I know you think your time is up, but your time hasn't even started yet because I've got a lot of questions for you. Lisa, it was great having you on stage. Swift.
Likewise.
We all know Swift for this bank-to-bank foreign exchange transfer. Is that what Swift primarily does?
Swift is much larger than that as an organization. We're a cooperative, which has 11,000 plus members globally. We're owned by those members, which is what makes us a cooperative by nature. We are also the registration authority for the way that financial institutions speak to each other. Called ISO. So ISO is the standard, yeah.
So the cooperative, the 11,000 members, are these the banks, the financial institutions, etc.?
Yep. They're banks, they're brokers, they're asset managers, they're corporates, so they're all members of Swift.
Okay, now the big question on all our viewers' minds is Swift using blockchain or digital ledger technology?
So we are selectively looking at the use of DLT. The reason that we're doing this is because our owners are also interested in that as a trend. So they're looking at how do they leverage DLT for certain business problems. We don't think that DLT or blockchain is the answer to every problem. What we like to do first is look at the problem and then apply the right technology as the solution. So a couple areas where we are looking at it is, we're looking at it with, in Singapore for proxy voting, which is a big industry challenge that we face. We're looking at it and have worked with some large market infrastructures like the Australian Stock Exchange who are putting in place DLT for their new clearing and settlement system. We are also looking at it in other ways, but it's not just us looking at it. What we would like to be in the future is a platform that helps to connect our members up to the best of these blockchain solutions. So we're working with, for example, R3, who's been doing a lot of work as it relates to trade finance, and how do we link together that trade finance value chain to the payment value chain that underpins it all.
So you guys are very much looking at the space.
Yep.
Our viewers probably all know you for bank-to-bank foreign exchange transfers, right? That's what Swift is probably best known for. Are you using blockchain technology for that function?
So there is work that's going on from a market infrastructure perspective, who are really our stakeholders, who are looking at that. We would be very open to working with DLT platforms who are looking at that, but we are not in the market ourselves to do things like multilateral netting, to do clearing of transactions. That's not what Swift does. We are, at our core, we are a platform, and we are a place where we could connect up potentially to those infrastructures.
So if you follow crypto, and specifically crypto Twitter, you'll see that the big XRP community constantly challenges Swift. Are you worried about XRP? Can XRP disrupt your business? Can they take a part of the business and really disrupt it?
I think that it's really interesting, everything that's gone on in the payment space around DLT. I would just say that I think that the numbers speak for themselves, in that the old days of it taking several days to make a payment cross-border don't exist anymore. It's down to minutes and or seconds, even directly connecting into real-time payment systems. So those old days are gone. And outside of that, Swift has something called the global GPI, the Global Payments Innovation. And this Global Payments Innovation is all around making payments fast, transparent, and taking the friction out of that process. And this, I would say the numbers speak for themselves, in that $300 billion a day is done across
$300 billion.
Yep, across the Swift network, 50% of our payments. So it's a massive amount of payments, and it's a massive amount of our members that are already leveraging this. So if you compare that to others in the market, yes, there is discussion, but I think that the figures speak for themselves.
Now, you mentioned that Swift payments are very quick today. And the perception is, of course, that the payments are very slow, that they take a couple of days. How have you managed to get the payments down to such a quick period of time? Is it because you're starting to apply new technology and maybe DLT technology?
It's actually leveraging existing technology in a lot of ways, but it shows the power of our industry, right? So what it's done is it's taken a group of banks to get together and say, these are the rules by which we are going to live as it relates to payments. So we are going to do it within this amount of time, we are going to provide transparency on fees, et cetera, et cetera. And then on top of it, Swift helped to put in place some technology that allows for the tracking of payments and the transparency into those payments. So we have something called the UETR, the Unique Tracking Reference on the Payment. And what this allows us to do is effectively copy to the cloud where the payment is in the process, and it allows that full transparency into the chain.
So Swift, do you ever see Swift building their own blockchains, or could it be that that you'll use an existing blockchain for your applications?
I think this is a bit beyond me to foresee what our CEO might do, but I would say that I think we would be open to leveraging our platform more in the future.
So there you go. Swift is, quote, open to leveraging their platforms in the future. That's officially progress in the blockchain, where there wasn't progress this past year, but there was price action. I sat down with some hardcore crypto fund managers to see how the funds are faring in this bear market. How's the year been for you?
Pretty tough.
Tough?
Yeah.
You guys aren't as confident as you were at the same time last year. How's your investment thesis changed between 2018, where you could really throw darts at the dartboard and choose tokens, to where we are today?
So I think the strategies remain consistent. Now the market structures change slightly, so strategy drift is something that's a huge risk in this space, and I think as people are desperate for returns, they're going into riskier and riskier assets, and that's the last thing you want to do in this market. Actually, the opposite of that is being able to manage risk, and so with the onset of platforms like Tagomi and OmniX and Caspian, and the ability to trade and manage risk is actually a huge benefit to the market this year relative to last.
How do those platforms help you manage your risk?
So whether it's things like liquidity aggregators, so the ability to trade quicker and in bigger size, that's actually quite interesting. On the other side, in the derivatives world, you have OTC providers that are now willing to write you things like risk reversals, which is long a call, short a put. You get actually paid on that trade, and you could take actual risk off the table. So you can get long something like Ethereum while taking money in, versus having to allocate capital into the space.
So is that to say that even after all we've been through, the thesis at your company has remained somewhat of a trading thesis on liquid tokens?
Exactly.
What's your investment thesis looking like for 2019?
So we focused on ICO investments before, but right now we're actually looking into more equity investments. We're looking into more creative ways of investing into blockchain companies. So that's our focus. And another change in investment thesis is that we used to look into more of the protocols before, but right now we're focusing on basically two sectors. One's content sharing, and one's payment and gaming.
How big is your fund at the moment?
Right now, our fund size mark to market is 10 mil.
And what was your fund at the peak of its value?
At the peak, it was around 40 mil.
Michael, I'm looking at you. Protocols, are we protocoled out? And let me maybe elaborate a little bit on the question. If someone came to you with a protocol and another person came to you with a dApp, which one would you be more likely to invest in?
There's a wide spectrum of quality in both. I'd look at the highest quality of each. I think that the protocol level has not matured enough yet for a dApp, a truly viral dApp to take form. But that doesn't mean you should ignore the dApp layer at this point. You know, there are going to be extremely talented teams building dApps, and they'll be leveraging underlying protocols, and whether it's Ethereum, EOS, Cosmos, Polkadots, like there's a slew of mainnets that are launching into this year. Again, whether or not that's zero-sum game or additive to the whole space, we're yet to see, but I think you shouldn't ignore dApps just because protocols haven't developed yet.
Okay, so now I'm going to hit you guys with another curveball. We're assuming that sometime in the near future we're going to get a dApp that's going to become huge and get mass adoption. 1 million plus, 2 million daily users. If that dApp were to happen, which blockchain would it be built on? Given the blockchains that we have today.
Well, you didn't say decentralized, so I think Facebook will build its own blockchain for its token, which again taps into 1.4 billion WhatsApp users. So if that is the form that it takes, it will likely be a separate blockchain than currently exists.
What do you think? I mean, if we were to get a killer dApp today, what protocol would it run on? Is it going to be Tron? Is it going to be EOS? Is it going to be Ethereum? Is it Ontology, Zilliqa?
Well, I mean, Tron, I think it's already killer. It's already onboarded killer dApp, BitTorrent, right? So if it's going to be a killer dApp that brings in millions of users, and then I don't think it's gonna. They will choose to use the existing platform. They will build their own because it's such an early stage in blockchain technology.
Okay, so how far away are we from this killer dApp? Is it something that happens in the next 12 months? Do we have to wait 5 years? When do we get this killer dApp with hundreds of millions of users?
It's going to be some time. I think right now, I think speculation is still the name of the game right now. The nice part is everyone is building that still exists in this space. A lot of guys have gone by the wayside, so everyone's building, and so there is technology being developed, and there are scaling solutions that are coming out. But it's going to be some time before we are able to get that dApp layer.
So now I know you're both fund managers, and of course, being fund managers, you're very regulated in what you can and can't say, and specifically on a show right here on CNBC. So I'm going to ask you guys a personal question. If I were to give you guys each $1 million, okay? So you got $1 million, and you can invest this $1 million however you like, in listed tokens or in equity investments. What percentage would go to listed tokens right now after the bear market, after the crash? And what percentage would go to equity? And once you've answered that question, I'm going to ask you which listed tokens they are. So have a little think about it.
Are public stablecoins an option?
The Jamie Dimon coin is an option.
Oh, okay.
Oh, really?
If I were investing personally, and this is kind of how my actual personal allocation looks right now, it's something like 75-25 liquid to illiquid. And I also value liquidity. So that's
75% in liquid tokens listed, 25% in VC equity type projects with a 5 to 7 year time horizon. All right, of that 75% that you're investing into liquid tokens, 5 tokens, where does the money go?
What's my time frame?
12 months.
Obviously, if I'm going to be trading, Bitcoin will be part of that mix. I think BNB has a lot of exciting announcements to come in 2019 and is liquid.
Even at all-time highs?
Yep, even at all-time highs. They're at all-time highs for a reason. They're doing an incredible job engaging the community and structuring partnerships and business lines they think are going to work. On sort of a almost gaming, I like Loom, what they're building. Again, these are all personal views, not fund views. On the exchange, I think exchange tokens could be interesting, but they're outside of BNB, they're all fairly light volume. But Huobi token is interesting.
One more.
And I think there's a lot of critics of this one. And again, this is personal, not our portfolio. I think Tron is actually pretty interesting.
So you're a Justin Sun fan?
I am a fan of liquid assets that have interesting catalysts.
You're a Justin Sun fan. All right, so out of the $1 million that I'm going to give you, how much is going into liquid tokens and how much is going into illiquid tokens?
I'm going to say 50-50.
50-50. And of the 50% that you're putting into liquid tokens, the ones that are listed today on any exchange, what are those tokens?
I think I'm going to put most of my wealth into Bitcoin.
Bitcoin? There's four more.
Yeah. Bitcoin, EOS, Bitcoin Cash,
Bitcoin
SV,
Cash, SV.
SV.
Okay,
yeah.
that's not Bitcoin Cash.
Okay, but SV. Yeah.
SV.
And Ripple.
XRP.
XRP. I forgot to mention that before, but XRP has a great potential, I think. Yeah.
One more.
Mediblock.
Mediblock.
Yeah.
Is it a listed token?
It's a listed token. I come from the background, so just to get rid of the conflict of interest, I used to be CFO at Mediblock, and I love the project.
There were a whole lot of surprises in this panel and in this week's episode. Little did I think that these guys would choose Bitcoin, SV, and XRP as one of their top 5 tokens. So we heard this week that Facebook were finally launching their very own stablecoin. I wonder what the greater community thinks about that. Let's cross over to Lindsay Ju to find out.
So Ran, the question is the Facebook stablecoin going to increase mass adoption or deter it? Is Facebook stablecoin, is that going to increase or decrease crypto adoption?
Well, I think this is similar to JP Morgan coin. I think as much as it's going to get people talking about crypto, it's going to really bring about the importance of separating the difference between these kind of centralized corporate cryptocurrencies versus decentralized ones. But nonetheless, if it's going to get people talking about the space, I'm really excited to see that.
I come from China, and then obviously all the Chinese crypto guys are really excited about this news. They think it's the next big thing for us. Yes, big increase for sure.
Increase mass adoption, and using Facebook's coin and WhatsApp is going to be a way to do that.
Well, it's definitely going to increase mass adoption because Facebook is a household name, and people kind of have this hesitation when they hear about cryptocurrencies.
Increase mass adoption or deter?
Well, I must say that I'm a big fan of stablecoins, so I think there will be an increase, and I think that with all this volatility in the last months, stablecoin and like this can really help the adoption.
It'll increase adoption, but I don't think that's the thing we should be worried about the most, because Facebook still has a aroma of privacy issues we need to take care of.
It seems that on every episode of Crypto Trader, we find ourselves talking about the institutional capital and when the institutional capital is actually going to come into crypto. Every week we ask the same questions, and every week we look, and the institutional capital is still not in crypto. My next guest has a theory as to what it's going to take to bring the institutions into crypto. Dimitri, let's talk a little bit about institutions and how they look at the risk when it comes to investing in crypto.
Sure. So every institution is equally concerned with the market risk of their investment as they are with the infrastructural or operational risk. And whereas in more mature investments, that question is solved a lot easier, right? There are already established infrastructural issues that you know that have been solved. In crypto, everything's brand new.
So you're saying when we look at risk, there's actually 2 distinct risks that they talk about there. They look at the market risk, and that is Bitcoin going to go up or down? Is it going to be adopted or not adopted? And then they actually look at an infrastructural risk, and that's exchange hacks, people dying with the private keys.
Right.
Yeah. So when they add those 2 up, is that the total risk of the asset class?
Well, it's a total risk of any investment, including, of course, crypto investment. That part is the most difficult to quantify. There is no actual number that you can put to link to an operational risk of any investment. With crypto, everything's brand new. So it's a really tough proposition for a large institution to accept an unknown risk that goes into this formula and then they would really have no idea how much risk is attached to their investment.
Okay, let's talk about Nexus, because from what I understand, what you guys do is you reduce the risk for investors who want to invest in an asset class.
Nexus simply transforms our current expertise outside of the digital asset space into the digital asset space.
So you're going to go and talk to all the crypto funds, all the crypto institutions, you're going to evaluate them, you're going to identify the risks, and then you're going to select a few that actually meet your criteria, right?
It's a very tall order. It's a very difficult thing to do, but what we are trying to accomplish is select a very small group of managers who are going to become the superstars of tomorrow. They're not there yet because of all of the problems in the ecosystem, but there is, out of hundreds and hundreds of fund managers and investable options out there, there is a very small group that actually will survive and will do incredibly well. We want to identify that group and make it available to investors out there.
Okay, now you've been around for forever, you've done this before. How long before we see institutional capital flowing into crypto?
Well, it's already flowing, right? We already have a little trickle. I can't call it a flow.
I don't want to talk about trickles. I want to talk about,
floodgates.
Billions.
In the most optimistic scenario, the floodgates may start opening in a 2 to 3 years' time. And of course, once they begin to open, then there is no closing them. Then they are going to open wider and wider. I realistically don't see that happening, before that. But as we have these trickles, these early adopters already from the institutional world, it's going to take place more and more. So this is not a binary event, nothing today and then something 3 years from now. It's going to slowly increase.
So that's Dimitri, he's from Nexus, and he kind of says that we're going to have to wait 2 or 3 more years before the floodgates open. But when the floodgates do open, he's talking about $300 billion. 300 billion. That's almost triple the current market cap, according to, well, CoinMarketCap, one of the exhibitors on the floor. Bear market or not, we've seen 3,000 people abuzz and an excitement all about the blockchain. We'll be back here next week for Token 2049, which is the premier event here in Hong Kong. Until then, I'll be on Twitter at CryptoManRun, and you should trade well, my friends.
Crypto Trader is proudly brought to you by eToro. Discover a simpler way to trade and invest in cryptocurrencies and more.